Hi guys, hi everyone. Good morning, good afternoon, good evening, wherever you are. Welcome to IronFX webinars. Can you guys hear me clearly? All right, shall we just wait for 1 more minute? I will start the session. All right, guys. All right, shall we just begin our session? Again, welcome everyone to IronFX webinar. So today topic we will talk about top 5 candlestick reversal strategy and disclaimer first. Okay, the information in this webinar should not be considered an investment advice or investment recommendation, but instead education material only. And risk warning, our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. This product may not be suitable for everyone, and you should ensure that you understand the risk involved. All right. And the speaker today, my name is Peggy. I'm investment analyst and a prop trader. Okay, so this is the agenda for today. So basically, my apologies. I think I forgot to change the topic. Not the topic, okay. Quick adjust on this. So sorry guys, I think I forgot to give me a second, okay, like 2 seconds, a quick one. So today is the 29th. Okay, got it. Okay. So the agendas today we're going to cover, I think I just have to just go up a little bit, make it nicer. What are candlestick? Reversal was a breakout, and top 5 reversal pattern, improving the probability of the successful reversals. Okay. And so before I touch on the top 5 reversal pattern, we just have to know the basic of the candlestick. Okay, so each candlestick represent price action over the specific time periods. Okay, the components we already know that they will have open, high, low, and close. And the type we have bullish and bearish candle. Okay, I'm gonna look here. We already see that. Here, right? So we have for the bullish candle, price have to open from the below and closing right here. And this is a higher price. This is the lower price. We call this a wick. We know that this is the body. Okay. And the bearish, which it come from the resistance, that's why they are selling off from here. The opening is here, closing is the below, right? The highest and the lower is the same. So it is, if gonna read the candlestick pattern, right? It's gonna look like that. If there is a buying or if there is selling pressure here, put the price down. Okay, this is the lower. The body is gonna close down, correct? And this is maybe opening, and from opening here, put the price down. The body might be somewhere around this level. And this one, if you're gonna read, this is the red candle, right? And from here, you're gonna, let's just say, close somewhere around this mean. So if we're gonna see, like, we know already that there's a selling pressure on the market or bear is taking place. Okay, whenever we see the long wick and the body is, every small body, we really know that there is a bear control the market. Okay, by right now you should already know where the opening, where the closing, because this is very important if we're gonna read the candlestick pattern. Okay, move on. So why cannot? Okay. Oof, why cannot delete? Okay, I think I need to delete it. Forget about this slide. Okay, I have another one, which is a better one, which is here. So we talk about the reversal versus breakout, and we already know that. Hello everyone, hi, Jamiru, right? Nice to see you here. Reversal pattern is a price change direction from the uptrend to downtrend or void versus, and we're gonna look for the PA letter or price action. Typically happen at the key support and resistance. So it is very important that you need to know how to identify the key support and resistance, because usually you will see price action at the key level. But sometimes if you identify the key level incorrect, right? And then you see the price action, that might be the correct one. Okay, then you need to wait for confirmation. Usually I use the confirmation, which is RSI, to identify the overbought and oversold, meaning that if I were to identify the key level, this is my resistance, and maybe this is my RSI, and this is my resistance level. Okay, if price rising to this resistance and I see the price action, okay, meaning that my RSI have to be at least at level 70, or this is to be in H4 or H1, meaning that I have a confidence to sell at this level. I have the rejection, I have my resistance level, and I have the overbought. Okay, and then I'm gonna sell. Okay. Right, for the breakout, you see the price breakout of the range could be the sideways. Okay, I want to show you how you're going to draw the sideways, I mean the box. Okay, and then how we're gonna see whether it's a breakout or fake breakout. Usually lead to continuation or not reversal. Okay, need strong momentum and volume spike. Okay, so now let me look here. Okay, good day everybody. I'm gonna look here first. Okay, gold is selling off here. Whenever you see the ranging and then you want to trade, right? If you want to trade with the ranging market, how you're going to draw? You need to draw the body, not the wick. Okay, for example, here. Let's say this is the box, right? Meaning that based on M15, over here, you're not gonna draw at the wick. You need to draw from the body you want to trade with the ranging market or sideways. Whenever you will see that, okay, based on maybe here, I'm gonna from here, you see based on this, it was price close below for gold, okay, at the, let's just say 3755. Based on M15, you will need it, okay, you want to sell here, price falling to this level, maybe they come to tap in the OB here, okay, that's why you can see the rejection, right? And rising up back up again, and then you sell. Maybe you want to hold up to here, but price did not go all the way here, right? And what you need to see in M15, price start to make the higher low, right? From here, M15 price close above the range, right? The bar, then you will know that this is going to be the bullish continuation. So rising, close above, you can see the pullback here, and they will buy, yeah, the buyer, right? The traditional trader keep continue to buy up. And you will say that what about this M15, the rejection here? You could have the soul, something like that, right? Even though you were to refer to this, you will see that M15 price also closing above the all-time high. It used to be all-time high 3761. Not all-time high, sorry. I'm talking about like here, for example, here, right? You can see that on the higher time frame, right? In H1, I'll move back here again. In H1, it's gonna be this level. Let's just say if I want to in H1, you can see that okay, the ranging gonna be here. If you were to draw in H1, closing, pullback, but to me, if you were to zoom in M15, you will get the entry in the pullback here, rising from 58 to 82, more than, let's just say 200 pip. Okay, and now it pull back to the box and continue to make the Deformia breakout structures. Okay, and then break all-time high, and they break the all-time high. Now, gold was at the ATH right now. Okay, and I will sell because when they pull back, I will say, okay, if they're gonna make the M pattern, you go high. Okay, I'm gonna hold, meaning my stop loss slightly above the ATH all-time high. That's it. You can see price falling really strongly. If you want to buy, okay, for the gold, you should wait here. Basically, I'm still waiting at this level. I give you first, and then we're gonna cover the price action very soon. Since I'm already give you, this is the entry for the buy entry. Okay, this is all-time high at 3819. Okay. Now, I have the example of this morning that you guys should buy gold as the New York section. Sorry, it's the Tokyo section. Okay. Okay, now top 5 reversal pattern. We're going to take a hammer, inverted hammer. Okay, it's appear after the downtrend. You look for the long wick, small real body, signal bullish reversal. Okay, we know that this is a bearish move, right? This is a bearish at this the key level support. You see the inverted hammer, right? You can see that the selling off, and then there's a buying here. And the next candle, okay, you can wait for the next candle to close, which is what you can see here. The body is closed, the second candle, okay. You can see that it's closed more than 50% of this candle. You can see this your confirmation. Okay, so you buy. You can buy at the third candle or you can buy at the second candle. Stop loss you put below. This is the inverse hammer. Okay. The next one. What every time need to. Okay. Shooting star. Okay, shooting star. I think I saw in gold. Okay, I'm gonna show you later. So this is also. Okay, so they say that shooting star appear after the uptrend, long upper wick or shadow, small real body, signal bearish reversal. So this is a uptrend, right? At this level, you'll see the rejection. It could be the rejection over here. You can see that, and then you can see the body, right? The close. This is the closing, opening. Okay, closing and opening. So meaning that there is a seller willing to sell at this price, right? The example of the shooting star, which is here. Shooting star, upper long wick. I would it really hard to buy shooting star and gold currently. Got a really strong uptrend. Okay, let's say I'll pick here. Okay, it would be out here is a shooting star, right? Even though in the picture you can see that it's a shooting star, right? It's this one, correct? Here in H1 time frame. And if you were to look closely, you look at the body, opening and closing. The body opening and closing is not close above the 34, 32, and price went up and closing with shooting star of price action. Okay, and then where you sell, you want to highlight the zone. This is going to be the zones, the blue box, right? Went to the zone and then you sell. After you sell here, even like here, right? Where is the stop loss? If you're gonna trade with the shooting star or those like price action or PA, usually I'll put my stop loss above my the P or price action or at the wick of the price action, because just to prevent the like stop hunt. Okay, so let's say you wait for this, you see the shooting star and then you opening here, stop loss have to be here. If you enter at the third candle, meaning that if you wait for a H1 to close here, opening and closing here, this is gonna be your entry. Okay, whenever you see the opening price somewhere here or the pullback at this way, half of the candle, the stop loss for this candle to close have to be at this wick stop loss. Okay, and then you sell, right? Let's say you sell maybe here at 28, price is falling to where 16, about 100 pip. Okay, from 100 pip rising again, if you not close, you might get a stop out if you put a stop loss here for this entry. Okay, usually H1, if you see the price action, I will aim for 100 pip. TP1. TP2 would be 150 pip in H1 time frame, if you see the price action. But if you put a stop loss above here, even price rising is not going to hit your stop loss here. But usually I will just close at 100 pip for H1 price action. Okay. And another one, we have the bullish average engulfing candle. So this one, we already know how to identify. So basically, last candle engulfed the previous one. This is the bearish, right? The last one. Okay, I mean the previous candle here engulfed the previous candle. I mean the present candle here engulfed, right? You can see this is a bearish. So if you trade with the OB or those like other block, then we would identify that if price come back to the OB here, we're gonna sell. Okay, it's the same for the bullish engulf. After the downtrend, you see that this happened at where support level. Then you see the bullish engulfing candle, and then you will identify this a bullish OB, and then you're gonna buy at the next opening candle, right? Which is here. The currents over here. Before that, before this, we sell. Let's say here. H1, okay, closing with bearish engulfing candle. So this is the zone we want to sell, okay? In the lower time frame, I'm gonna wait for price to pull back to the zones and then you're gonna sell. Below here, they also have the bullish engulfing, which is price closing with bullish engulf, correct? You can see that. And this is the support level. From here, price come to this level, we're gonna buy, okay? So slow. Right? And now I'm gonna sell at this level. The TP I would aim for, because I'm in the lower time frame, 50 pip, this is gonna be the take profit for the sell entry, right? This take profit. And you can see that price closing with price action. Whenever you see the price action like this, you can buy. Okay. And now keep in mind that this is the all-time high, and H now price rising, and we see that okay, if price rising and if not close above the ATH, okay, if they might form the M pattern or equal high, and then sell, and then I'm sell. Okay, and you can see that price all the way, if they can close below this neckline or this level, that will be the continue to go our buy entry, the lower time frame, right? They're gonna, if the break, if they can close below, pull back, and then you're gonna sell, right? For the pullback, I need our target here. And another price action at the Tokyo session or Asian section based on the M15. Okay, right here. Today is 29. Okay, here. Oh, here. Do you see price action? There's a bullish engulfing candle, right? Do you see that? This is the bullish engulf. Okay. Price come to the bullish engulfing candle, have the rejection. Do you see the price action here? Right? You see the price action and continue to make an all-time high, which is the same like last Monday. Okay, last Monday or Asia section make all-time high, London make an all-time high, but now Asia will push the price all the way all-time high. And Asia, you can see, the London section, you can see kind of like have the selling off because it's too high already, I think. And today there's no news. Okay, if you trade gold, you should spot a lot of price action as the key level. Okay, buy, and you can hold, and you can see that price has closed above the resistance, right? Close above the body. You can see pull back from here, 3785, people just buy up. And that is the target. And now price is falling. You see that? If they can close above this neckline, here is gonna be the buy entry for us. You just sell at 19 at all-time high. It's about 300 pip. Okay, from the all-time high falling to 3785. Anybody hold, sell? Anybody sell gold? Anyone? Okay, so just now remember it's a morning star, right? It's a morning star, which is this one. This is morning star. Morning is at the support level, so it's rising morning. If opening either O on the top, it's the evening. That's a sunset, right? It's an evening star, which is here. They will say that you might spot the three candle pattern, signal strong shift in momentum. Morning star bullish, evening star bearish. They will say there gonna be a three candle, which is here. How many candle? It's a three, right? You're gonna look here, 1, 2, and 3. Okay. 1, 2, and 3 as well with strong momentum. And after you see the either morning and evening star, you see the momentum is selling off, buying off, right? You can see that come from the bullish end gap, evening star, morning star. You can see the momentum. Actually, there's so many like price action in gold. You can use the price action for the confirmation as well. Here, you'll see the evening star here. Anything that is the wick and then very short body from the key level, right? You do that. This one you can say this is a morning star. This is an evening star. It's where it's at the resistance level, right? You can see that, and then you can opening at the third candle and then you sell. Okay, you will see that. This one as well, right? This one closing with price action, bullish in gap. Okay, from here. Okay, in H1. Now you will say, oh, I'm not confident to buy here because I would say that this is my resistance level. This is your resistance level. Price still have the rejection. So now you need to wait for H1 to close, or you can go to the lower time frame, which is the M15. Okay. Right, price is close above. Now if price pull back, so you go to H1, if price pull back, or it's actually it's a pullback here already, right? In the lower time frame. Here. From here you see, oh, I see the price action. Okay, from here you see I see the price action here, right? Price is just falling. Let's just say 60 to 70 pip, and it's rising, meaning that it's washed from here to here. Draw the body. Price was ranging in M5, right? Before they continue to make the bullish move, and on the left you will say this one was the all-time high in the body. Okay, but usually I don't look too far away from here. It was sideways until this body close above. Okay, sometimes you will say, oh, can I draw at the wick? To me, whenever you see ranging, I will draw at the body, because I want to see whether price close above. You can see price close above, have the rejection here from the all-time high, used to 3,700, let's say. Price pull back to this. You will see that we're gonna buy here. Then the people might say that I'm not confident to buy this because it's already all-time high. But you don't forget that the momentum is still in bullish, right? And over here, you will see spot the morning star, right? And this is what the pullback. at this level, right? And you see that the momentum, buy, right? You see that buy here, buy, M15 buy, and the body close above this resistance out of the box, rejected at the resistance, pull back, and now you can see the close above. Whenever close above all-time high, because this is your confirmation that it's gonna fly high, price close above the resistance level at 3699, which is the body. Okay, you see that the body close above. That's why the momentum, bullish momentum is coming. That's why you have to keep buying. Right? You see that? This is how you read. Okay. Break. Resistance. Now they break, right? You see this? This they break, right? See this. From the resistance, pull back, now become the support. That's why this morning people who buy here now is what ranging already in the lower time frame. Okay, you can just draw like this: support, resistance, break, pull back, buy. Some of the trader they still hold the buy entry, and then they aim for 3,800, but price all the way to 3,819. Okay. This is going to be the last one for the twister top and bottom. So basically, whenever I see like that, meaning that the two cannot be similar high and low, indicate market rejection, often seen at the major turning point. Okay, you see that? To me, easy for me to understand is that whenever I see the closing and opening at the similar or the same price, meaning that this to be too high already, no one want to buy at this level. You can see that's why the opening are they willing to sell at this level. It is same for the support, right? Selling off, closing below, and opening here. So whenever I see this kind of candle, I will just read like that, and I'm willing to buy at this level. Or you can wait for the next candle and then you buy. Is the this pattern, it will look like this. Okay, for example here, right? Here, you're gonna look at H1. It may not really look beautiful because this one should be slightly longer, but if you're gonna look at on top here, I would say, okay, now go ahead and make all-time high. It was the all-time high here or ATH, right? I'm zooming to see, even though from here, okay, you can see the opening or closing 1817, and another one is opening 1817 here. So London section came in, okay, so they're selling off from here, rising back up again, opening where opening here. You can see that people who just buy here with no wick, no seller, and they're closing the profit here for the buy entry, and after that no one want to buy because we know that price of the all-time high. They'll sell off at 3,818, so you sell. So if you to zoom in M15 now is ranging or sideways. Now it's a sideways right now, meaning that you need to draw like that, and then you wait for price to close above above the box, okay, or if the body close below at the green or red, usually gonna be red, and then you sell. Either one of them, not the wick, not the rejection, need to be the wick. Okay, now I will say that, okay, now is make the equal high or like look at pattern. So they need to close If they can pull back, we're gonna sell, right? And then we're gonna target at this level that we're gonna buy, right? This level, correct? So now in M15, it is obviously price ranging. So you need to draw the box like this whenever you see the ranging market. M5 every obviously. So now they give you sell here, we buy, you sell, we buy. You can buy up. Stop loss, whenever we see ranging, we know that we just put the stop loss just slightly above. And if you for buy entry, put the stop loss below 3805 or oh 04, then that's it. Because it was ranging right now. Pull back a little bit, that is the body. And 15, somewhere here. Should be here better because these are the resistance, right? Close above, pull back the support level and the support level. So basically, it's going ranging right now. All right, guys. Any question? It's quite straightforward. Okay. Quick combination chart. So basically, pattern, we have a hammer for the downtrend, bullish signal or medium. We have shooting star trend before it's a uptrend. Engulfing is for both. It's reversal for either bearish or bullish. Engulfing candle is signal for the reversal. Morning evening star for both, also for the reversal as well. Twister also for both for reversal as well. The strong one, whenever we see the engulf, morning and evening star, okay, you can draw the zone and then you buy or sell. All right. Okay, now this is going to be my last slide. I think improving the reversal success rate. So you can use the volume spike on the reversal candle and you can combine with support and resistance level and you can use the Fibonacci level. Okay, if the Fibonacci level line up or close with your support and resistance, that's gonna be the strong zone. You can use the trend line breakout. We seen the trend line breakout in gold in D1 before, right? Have you guys ever seen the trend line breakout in D1? Right before it was consolidated here. Okay, and then you can see the breakout of the trend line, right? This is a trend line breakout. Okay, you can see that trend breakout here also have the confluence with the resistance level, right? You see that resistance, trend line breakout, pull back to from the resistance, it becomes support, and then it's bouncing off here at these zones. Okay. Risk management tips: always use stop loss below the pattern or below the low or above the high for the sell entry. Combine candlestick with higher time frame. Usually I identify the key level on a high time frame. Then lower time frame would be my confirmation. Okay, meaning that in M15, if there is a price action, it might happen at the H4. I identify the key level based on H4 time frame. Avoid entering on the first candle alone. Wait for the confirmation. If you are conservative trader, you wait for confirmation. If not, if you're aggressive, price at the resistance, you sell. If you are confident with the level, you may just sell. But sometimes, if price closing with excuse me, bearish engulfing, for example, it should be red. Usually, let's say you just sell now, right? You sell here. Price falling, usually they will pull back to the box, right? Here, and then you can have another sell entry. You quote first. When price pull back, you sell, have another sell. Okay, usually in the lower time frame, you will see the pullback. Excuse me. Okay. Why I cannot delete? Any question, guys? If oh, cannot draw, it's okay. Okay, so this is my last slide. Excuse me. Okay, this is gonna be my last slide, and after that, we're gonna look for the setup together. I don't know why suddenly I have the ET throws. Okay, now let's look for the setup together. The current goal. Okay. D1 time frame, we can say, okay, these are all-time high, and then we would identify this is your first resistance right now. In H1, our first support is gonna be right here, and we gonna wait for the buy entry. There's no news. Okay, this is the zones. So if price falling to these zones, you see confirmation like price action, we're gonna buy from level. Okay, go to H4, right? Okay, in H4 time frame, what I can see that there's a bearish divergence here versus the indicator. Okay, so this is gonna be our buy entry, meaning that go back to the M15. If M15 gonna make the like double top or M pattern, meaning that in order for them to break below, I mean to go to our buy entry, they need to break below this level. Either the break below, you pull back, you sell, you target here. The break, pull back, you sell, or the all the way down. Okay, and then you wait for the buy entry here. If you were to buy, to make sure take profit, this is gonna be your take profit at the neckline first, TP1 for the buy entry. Okay, meaning that I'm gonna put a buy limit, pending buy limit for this. Okay, long. Let's say I go to this for this level. I'm gonna aim for the wick. My stop loss, I'm gonna put at this wick here. My recent reward is 125 or 126. So this is the entry. So basically, I'm gonna enter at 82. I'm gonna put my buy limit at 82.5. Let's just say. I'm gonna wait for the buy entry at this level. Okay, and then this is my TP. I'm gonna aim for the wick, at least TP1. Okay, if M15 closing with equal high or M pattern, break. If you see the break and then pull back yourself, target here. If not, you wait for the buy entry at this level. Okay, guys, any question? Now it's time for you guys to request. Do you have any instrument you want me to look for you? Or any one of you guys want to sell gold, but we already meet the entry, right? Because currently gold is ranging like we just discussed just now, right? So now we can't do anything. You need to wait. You want to sell, you have to sell at the above the bar. Remember, zoom in to see M15, right? I'm gonna remove here. This is the body, which is not close above the 3818. Okay, so meaning it's sideways. Either you wait for price to close below the box first, which is 3804, and you pull back, you sell. If not, our buy entry gonna be in H1 at this zone, right? This zone still fresh. We still have the demand zone here. You can see that break above, pull back. This is our demand. We're gonna buy here. Then we're gonna target here first. Okay. Today there is no news, but tomorrow onwards we have a high impact news coming for the US dollars. Okay, guys, we have 50 minutes. Anyone want to request? Come on, guys. Anyone want me to look for the T level? BTC, okay. BTC, this one was at the zones, right? Look for the BTC, still strong, bearish move. Okay. Monthly, I still buy and sell. Okay. Based on the divergence here. Right. This month is gonna be one more day, which is tomorrow. I think this month might ending with the bearish candle. And look here. For the month of July and August, opening and closing the candle similar or same price. It was at the 115. Let me zoom in. 115, right? You can see the price did not close above 115 point somethings. The body, which is this as a support level, 102. This is a monthly time frame. Here, you see whenever price, remember we have the price action here. What is this? Evening star, right? This is evening star, and this is the body of the monthly time frame. And when you go to the weekly, what do you see? You have really strong selling, and you see that weekly time frame opening and closing almost the similar price, and we have very strong bearish divergence here in the weekly. Yeah, right? You see that bearish divergence. And this level, price closing with price action, this should be choosing star, right? Or sometimes I forgot the name, but this to me is a price action. Okay. And this second candle, the confirm that price gonna fall because they close below this candle, meaning that these two candle is engulf, right? It engulf this. Why is not? Why is not? Okay, maybe here, right here is right. You see that it engulf this candle. Okay, and now price pull back, have the price action here. Okay, that's why you hold the sell. And in the weekly, this is the support level, which is today, which is Monday, 2nd. You see the rejection. Okay, we're gonna have a closer look on the lower time frame, which is in D1. Okay, in D1, what do you see? This is the demand zones, right? Demand zone here and here. Do you see the demand here? Even though OB is already worked out because this one went down to the box, right? But this is the demand zone, or you can say that this is your support level in D1. Okay. I would say this is going to be the sell entry of first resistance for BTC. Go to H4, right? Whenever price at the support level or demand, you will see that price was ranging here before they decided, let's say here, it was ranging. So if you want to draw the box, this is gonna be the box, the bodies. Okay, this is gonna be the body. And now price close above the box. If you go to the M15, right, the box over here. I'm not gonna draw that one, okay? You see, it was ranging, suddenly it rising so strong, and now it's at the resistance level in either H1. H1, you have the bearish engulf, right? Supply zone here, and H4, you will see that, okay, you have a hidden base here. So it is the resistance level, okay? And if you're gonna use the Fibonacci, they're gonna be not close to anyone, so I'm not gonna use. I'm gonna leave it here, or I can just maybe add in, since that's above, that would say, okay, this is gonna be the zone, and then I leave the 78.6% right there. Can we sell? Then you need to go to the lower time frame, M15. So M15, okay, divergent up, price closing with bearish engulfing candle. So I'm gonna sell, maybe best here. My stop loss just above this swing high. That's it for scalping. Okay. And then the signal of this, it was ranging before I close. Okay, meaning they need to close below. If not, falling here from the box, you buy up. Okay. The next resistance is what here. Okay. On a higher time frame, it will look like this, right? I would say that based on the market structure, if I'm gonna look at the BTC, the high, what here, the body close below. This is the lower, higher, low, higher high, lower low, lower high. Okay, high, lower, low, lower high. By right, if they can break below like that, or maybe here, the pull it continue, it can, as long as price is not close above this high, and then the like this level, then you will see the strong bearish momentum 127. Okay, if they close above this high, and then I think the will be shipping from the bearish to bullish, but based on D1 time frame, you can still buy at sale for BTC. Okay, yeah, it could go all the way to 102 for the monthly time frame at the body, and that the divergence as well. Okay, guys. All right, this is the view for the BTC. Okay. All right, guys. That should be all for today. All right, take note of gold. I'm still waiting for gold as well. I'm gonna buy. Okay, I'm gonna for the buy entry together with you guys. Right now gold is ranging. So basically, what you need to do, just close the computer. I'm gonna set my buy limit at this zone because there is no news. Okay, then maybe later I'm gonna maybe open for my mobile phone like and look again. But what we can see in M15 price is ranging, is no point for us, looking at gold right now because it's ranging since the London session open, right? You can see that no point for us because you see that from the Asia all the way to the London, 500 pip or 5,000 point. Let's say you were to just buy one lot, you earn $5,000 for gold, right? If you were to if you buy at the Asia, pull back, tap into the Boolean gap rising and make the all-time high, new Asia high, go to the London high. That will be, like I just mentioned, let's just say 5,000 point or 500 pip. Right? If you buy one lot, 5,000, we don't need to trade, right? Today you earn 5,000, we don't need to trade, but yeah. Even though, right, I did not hold on to here, whenever I just think like that, it make myself happy. Even though, I'm not, hold up to here, or even though I hit my stop loss, I just like, I imagine if you read those like, or you study law of attraction. So whenever you think like that, you will attract all the good thing to you. Whenever hit the stop loss, you need to kind of like, eliminate or kind of like, get rid of those are negative thoughts. Okay, because whenever you have a negative thought, your trading won't be, I mean, you won't be happy when you always have a negative thought. Every time I hit stop loss, I would just kind of like have a self talk. Okay, and then I try to get rid of the like, okay, I hit the layer, why I hit the layer, I should close, I should cut loss or whatsoever. Whatever happened, it happened. We cannot undo or undone, right? So just move on. Okay, as long as you still have the capital and you have the knowledge. Okay, the next day you can just come back and earn what you have lost. Okay, it will take time. Let's say if you lost 1K today or 2K today, you shouldn't have the kind of mindset, okay, tomorrow I'm gonna get it back. What I have lost yesterday, 1K or 2K, meaning that you kind of like, pressure yourself. Okay, you just slowly, okay, I will take time to earn it back. It could be 2 days, 3 days, or maybe if the market in your favor, maybe tomorrow you can get back 1K or 2K that you have lost today. That's normal, okay? As long as you know where to stop, hit stop loss, tomorrow we come back again. Okay, I also have cut loss or maybe hit the stop loss before many times. Okay, my win rate not 100%. I have to tell you, I'm not God. Okay, I'm just a human, but I just know that where should I just surrender to the market, where should I stop, tomorrow I'll come back again. All right, with the fresh mind. Okay, and be positive. Okay, because if the trading is so easy, I think everybody of us gonna already be a millionaire, right? All right, guys, that should be all for today. I will catch up with you guys again next week. Okay, take note of this buy entry. Okay, maybe next week gonna review together again. All right, that should be all for today. Bye for now, guys. Take care. Bye bye. All the best. Good luck to all of you. Bye, guys. Bye.